low targets, and what do we think with the highs? Let's start with the lows for Bitcoin, the crypto crash right now.
Okay, so right now, crypto getting a little bit of a bid as the dollar has fallen. Per the chart, we're in this bigger wedge pattern. So again, if I zoom out, this is pretty remarkable wedge pattern where you basically had the all-time high down sloping trend line. If we can break above that, it gives you a little bit of a short-term short squeeze on Bitcoin. Overall, I don't see it lasting for very long, and I ultimately see more downside. Right now, my high-end target on Bitcoin is around the 12 to 13,000 level, which would put us right down here at this pivot. Right now, we're still hovering around that 2017 all-time high before the last bear market. But I do think eventually it gets pushed below this level and collapses down to, again, 12 to 13,000. I know a lot of people have heard the headline of, like, Gareth says it could go as low as 3,500. That's kind of a worst case scenario for me, where if we really see, the financial markets collapse, we know that Bitcoin kind of follows the financial markets. It hasn't become a kind of a goldish type thing yet. Then you could be looking at a $3,500 target. Long term, I love Bitcoin. I think there's a huge place in the economy, in the global economy for it. But again, cycles are cycles, and we can't deny the fact that, number one, we're in a bear cycle. Number two, this is the first bear cycle that you haven't had Fed printing of money, which means it probably is going to be a worse bear cycle than past bear cycles. And we haven't even corrected 80% yet, which is what the past cycles did. So you have to kind of take that into kind of analysis. Where I get my $3,500 target, if you compare the .com era to the last couple of years in crypto, where you saw Dogecoin and SHIB and I mean these crazy meme coins, and some of these coins going up thousands and thousands and thousands of percent, if that was the equivalent of what happened in the .com era, and Amazon in the .com era collapsed 95% before going up tens of thousands of percentage points, then you have to think maybe a 95% correction in Bitcoin could occur, in which case you're looking at 3,500.
All right, so that's where that number comes from, just as an absolute worst case. But essentially, it still remains above the previous lows, which in technical sense, it's putting in higher lows.
Yes, higher lows on the chart, correct. So you're looking at the June right here. But I think you have to kind of keep in mind that this could be a bearish pattern. If we go to the parallel channel, right, and we put a trend line below these lows here, and we drag this up, you basically are creating this. And so when I'm talking about maybe a breakout from here, you probably would head as high as this level here, which is around 25,000. But you're still in a sideways channel, which from this drop, or you could look at a bigger drop, it's still bearish as of now. It hasn't flipped to bullish yet on Bitcoin.
There's just the energy is basically dying at the moment.
It is, which, by the way, so there's two things that tells you. First of all, the stock market has been more volatile than Bitcoin. I never thought I'd say that, but that's been the case. And then number two is that this quiet periods are the periods before big moves. So you know something big is coming. Think about the eye of a storm, where it's very quiet, but then when you come out of the eye of the storm, it gets real crazy. So at some point, something is going to trigger here, either a big move up or a big move down.
Dollar's going up. Bitcoin has remained during this channel, whereas others have started to fall.
Yeah, you're absolutely correct on that, especially over the last week or so. In Bitcoin, I was commenting on how the stock market was really falling until today. The dollar was really shooting up, and crypto really has gone sideways. So I agree with you. That's a short-term bullish indicator. Again, I wouldn't look at that as a longer-term signal of a bottom yet,
sure,
but short-term, absolutely. And that kind of gives us a play where if we look at this here, and let me just erase this trend line, but you have this kind of channel. And look at where we've been hovering, right at the lows. And if you look here, we bounced. Here off of this line, we bounced. Now we've been hovering here, and it's held up. So maybe we have one more trigger to go up to about 25,000. Then the question is, can we break above that? And that's going to be the big question there. But I wouldn't, the way it's been acting, it's been very, very healthy for Bitcoin to be holding up while the stocks have been going down and while the dollar's been going up. On Ethereum, I'm more of a swing trader on Ethereum at this point. But yeah, I mean, Ethereum, it's still well above these lows from June. It looks like it held this retrace. And this is just a great example of technicals where you had this, you can see pivot high, pulled back, broke out. And we know that when you break out, charts tend to want to come back to home base. Where was that breakout? Well, guess what? It was right there. It came right there and has kind of held up relatively well. Now, if we rally up, this down-sloping trend line becomes the resistance point. Now, with the merge, I mean, it's kind of been a little bit of a crazier analysis point on the merge, but right now, again, you're holding support on Ethereum, and it wouldn't shock me to see us go up and test this trend line up here. Sell the news event. And I always say this to people is that, like, emotion, like if you're in a bear market, that's the most powerful thing. Like if we were in a bull market, then it probably would have gone to all-time highs, right? Or would have, but you have to recognize what type of market you're trading through, where instead of a buy the dip market, it's a sell the rip market. So you get these gifts of these big moves and you have to be selling into them.
Definitely. Gold, silver, do you get into that at all?
Yeah. So I've been a big gold bug all year long, disappointed, honestly. In some ways, right? So a couple things to keep in mind. And by the way, gold had just an awesome move today, big move up. But number one, if you're trading in euros or yen, gold's done amazingly well this year. If you're trading in dollars, I think gold's down, 6% on the year, which, by the way, it's been one of my favorite assets for 2022. And at least it's been the best performer in an otherwise nasty market, right? Bitcoin down huge, S&P, NASDAQ down huge. If you're down 7% while everyone else is down 20 to 30 to 40%, you're doing pretty well. I still think that gold is going to be a big mover. The chart in the longer term is very bullish to me. So if you look at where this chart was going back to 2018, it had this big bullish move up. Well, it's been digesting that, right? Charts, when they have these big moves, it takes a long time to digest. And I think that you've seen that digestion going on in gold. I think you broke below this line mainly just because of such a strong dollar move. But ultimately, I think this is a chart that will eventually break out to the upside. And I do think you're headed to 3,000 or greater on gold, maybe as early as 2023, 2024.
So soon. I'm looking at it as a multi-year play here because it takes so long for these moves to happen. But yeah, I definitely still see that as a pullback. Sure, there's a double top. We've got to just digest that, as you say, and then start that multi-year move back to higher prices.
Oh, I was going to say, I mean, and this is just such a cool technical point, but I'm erasing these trend lines on purpose because I want to show you guys. So the last time we had inflation like we do now was in the 70s into the 80s. And what you actually see is that the chart is almost identical, right? So let's look at this chart, right? So we had this big move up here from 2018 to 2020, and then this kind of choppy sideways down move. And if we go to the monthly chart and we go back to the 1970s on gold, and bear with me as I get back there here. So let me zoom in here. So what you can see here is that, and let me just try to get in. So look at this. Let me just try to get my arrows here. So imagine if this was the move from 2018 to 2020, and then this is the move from 20 to 22, which is what we're experiencing now. And notice how the inflation is the same, right? I mean, you're seeing this massive 8-10% inflation. Well, that was basically what we were seeing back then. But look at what gold did eventually. It had this monstrous move. Now, again, I don't think gold's going to do the equivalent of 1,000% move up. But I do think this is the next move. And this is a very common pattern, right? Big move, digestion, big move coming. And so that's kind of what I'm thinking is going to happen with gold coming up over the next few years.